quite back to where we need to be yet. Now, I'm kind of thinking that we're going to see a weaker dollar into year end, and I'm going to talk about why. So if we look at the dollar on the daily chart, remember we did a double bottom and this high was the resistance. This is always the target when you do a double bottom or double top, the low in the middle. And we are reversing here. And the rule for me is if you see a double top double, you put your fib retracers on like this. If you fall underneath the 236 fib, you're in a bigger move back. And this is what we're doing. We've just dropped underneath it today as we start. Now this is a daily chart. We might not close underneath here, but we're also looking like we could be losing that daily 20 moving average. And if we do, remember bigger picture on the weekly in this dollar, I always thought there was a little bit of a risk that we could see one more swing lower back to retest the lows. You know, we're really just stuck in a sideways range. A more bullish move would be back to the middle of this range, 98.2. And when I look at everybody yesterday, you know, was talking about the UK and how the pound was going to hell and sell the pound, it was never coming back. And I have to say, I'm feeling pretty bullish. When I see sentiment like that, it always makes me a little bit bullish. The data for the UK was terrible in terms of growth today. But here we are, big picture on the daily, and we made this lovely textbook three-wave potential bull flag move, which is bullish. So that, and for me, the decision level, I'm going to put my fibs over both swings, as you do when you've got what you think is an ABC correction, and above the 236 fib level, which we've just broken in the US in the DXY. Above this 236 fib level here at 131, we should see a move to the top of the flag. Okay, next, at least 135, 134.9, 134.9. But I think that we have another push higher into this big resistance zone, which we used to call London Bridge back in the day at 142, 141.50 now. And let's talk about where this comes from. This is a 3-month chart. So each candle represents 3 months. So back in 1970, when we had a great recession, we made a big three-wave, you know, the pound was doing pretty good. We had a big three-wave correction here in the pound. And this 236 fib from this high was really significant when we first came back to it. When it was resistance, then it was support, and then when we came back and tested it, it was support and support. This is why we called it London Bridge. It was support in 93, it was support in 2001, and again in the credit crunch. And then the Brexit vote broke us underneath this support level at 142. And when we tried to get back above it, support becomes resistance. We tried here in 2018 and again in 2021 and couldn't. I think this is one of those levels that we are setting up pretty strongly to retest at 142. But the key thing about this level is if we get above it and we hold above it, I think we could see a much bigger move higher in the pound. So certainly a chart of interest. You know, we have the potential to flip these moving average. Let's go to the monthly because that's more relevant in terms of moving averages, because that's also where our monthly 200 moving averages, that's a really big deal. You can see it was a really big deal in the last decade, and so that's going to be a decision level. Above it, we're going much higher, and I think that we've kind of got a date to retest it. On the weekly, we've now got all of our weekly moving averages underneath us, and they're all lined up bullish. This is the 200, this is the 50, this is the 20. So for me, holding the support of making a three-wave equal measured move, holding the support of the weekly 50 moving average in the face of, you know, our Prime Minister trying to be ousted and really, really bearish sentiment, sets up a pretty decent move into year end. Obviously, we've got a couple of important targets to get through. We've got to get above the halfway of this pattern. That would be the weekly 20 moving average. Then we've got to get to the top of this bull flag. And if we can break the top of this bull flag, I think that we're headed to 142. And that does point to a weaker dollar into year end. And the candlestick last week was pretty interesting here at this 50 moving average. So I am a little bit bullish the pound. I'm quite a little bit bullish other currencies. I said earlier I was pretty bullish the Aussie dollar just because it's so correlated. If we think we're going to get a stock market rally into year end, the Aussie dollar is normally one to watch. And if we look at the euro, remember, we kind of reversed, this was our reversal zone we were looking at, and we kind of just tagged the bottom of this reversal zone and not the kind of big kind of pivot level at 1.2. And again, if we, this is a weekly chart of the euro, if we look at it on lower time frames, we are doing pretty similar in quite a few currencies against the dollar. And a weaker dollar should be good news for quite a lot of shiny assets like metals and quite good for shiny assets like crypto. We can hope, right? So it may be